What's going on, Chad? Here, just to give a few things off my chest. I don't know why. Maybe it's for my ego. Haven't updated about this in a long time. Talk to my family about this all the time, and basically, I just wanted to address now that we have some consequences of inflation into the headlines. I'd like to talk about it. This isn't financial advice. This is just pointing some of the obvious out because basically back in 2019 started printing a crap load of money again, and the repo market blew up, and we were bailing out banks basically at a rate that we were in 2008. It just didn't hit the headlines. Nobody knew about it, probably because the Fed was on it before any negative consequences happened. But those negative consequences are today. It's a result of the past money printing that's into the system today. And after the illness came, when we started to see massive amount of money printing and no one wanting to work, you it's pretty, it's you would have to expect at some point there's going to be a supply chain problem. Like they're printing all this money, no one's working for whatever reason, for the illness or just because, that there's going to be supply chain issues. And sure enough, that started to creep already in 2020 and get worse in 2021. And price solves scarcity. It's pretty simple. Demand is infinite. Everybody wants everything. So, or everyone wants to better their life, their current situation. So, if they just want one more thing in their lives and they didn't do any work to make that or to make that happen, they just got money from the government. Obviously, things are going to start disappearing if this is happening with every household in the country and maybe in the world. And at some point, there's a negative consequence to that because now we're getting these inflation numbers that are super high and quite alarming. The psychology is that this is temporary because the Fed says so. But I would argue it's not temporary. And when that psychology changes is when we're going to have a major inflation event. We may even have a deflation before we actually go into another major inflation. But the stock market will tell us if that's happening because it'll start to tank and commodities will probably follow for a minute until Fed Reserve reverses course and prints even more money. Now, the real inflation numbers are probably more like 10%, which Shadow Stats does a good job of calculating that inflation. That is a crazy number. Now, this all happened during a dollar uptrend. We have had the worst inflation in 40 years, and the dollar has been in an uptrend. That's pretty rare. So look out if the dollar breaks 90. That's going to be an issue. That's going to cause even more inflation. Even if the Fed stops printing money and they don't raise interest rates meaningfully, which they're not, a quarter point is not going to do anything when the inflation is that's their numbers are 6.8. Shadow sets is at 10. So you have to do a number above 6.8 or 10 to stop the inflation. They're talking about a quarter point. It's not going to do anything. It's not going to get rid of inflation anytime soon. So this is one thing to watch because the dollar is in an uptrend, and once that sucker starts a downtrend, then we got some major issues. The other thing to watch is the bond market. This is actually the mother of all charts. This has been an uptrend forever, basically since 82, but more so since like 88. And you can see this just perfectly hit these channels. One time it went a little below, looks like it was starting a bear market, but got saved probably by the Fed. Now they're running out of ammo. They can probably bring this up one more time. If the stock market starts to tank, prices start to fall, I'm guessing people will buy bonds one more time. But eventually, there's nobody in their right mind that's going to borrow the federal government or anyone, when you're dealing with 6.8% for a 30-year at like a point and a half. Not going to happen. So I would expect this to do one more move up, maybe. Doesn't have to. And start to tank. And this chart has had the wind at the backs of the Fed. It has allowed them to print money in every single crisis and get away with it. Once this turns and the dollar turns, they no longer have free reign over any market. So the conclusion that I'm proposing is to get your stuff in order, because once this breaks, the past is not going to be like the future. A lot of people don't remember 2008. They do remember it, but they don't dwell on it. Uh, that's because everything got bailed out within a year. Real estate got bailed out, commodities, everything. And keep in mind that this chart is their aid, and it's going to end like the 70s. So you got to study the 70s. And the 70s were a rough time. Everybody talks about the 70s being a bad time. You got to study that to thrive in that environment, because once this sucker breaks, this is the key chart. The dollar is the key chart. Once they break, there's no going back. So watch the bond market break, 150, and the dollar break 90, and it's over. That means that anytime they print money to fix the system, it's going to cause massive inflation. And maybe that's their end goal, to switch out the currency. But for now, you got to protect yourself, in my eyes. That's about all I got.